Now, though, Christine Benz from Morningstar, and this is particularly about this battle over allocation, particularly with bonds. Christine, thrilled to have you back.
Tom, great to be here.
I love your notes here on bond allocation, equity allocation. Right now, where is the money going?
Well, we're seeing strong flows into stocks, and that's really a reversal of what we've seen in the couple years prior, where investors, retail investors, had shown a strong preference for bonds.
Well, within that, Christine, and you look at the strong flows into stocks, do we just assume it's a blue chip Michael Holland stock, or is it emerging market? Is the emerging market party over that we've seen for 2 years?
It does look like we've started to see some outflows from emerging market stock funds. In general, the investors who are gravitating to stock funds are liking the large caps, the blue chips. Okay,
let's bring up too much information, folks, here. As we look at the boxes, you got your Morningstar grid, and where do I want which box do I want to be in? Which box to be in? And this is the equity market, thanks to Jason Trunnitt at Strategas for this idea. The NASDAQ 100 compared to the S&P 500, and when the line's going up, that means more money's going into tech and, more volatile stuff. Christine, it's an improving market. Does that mean you buy the blue chips, or does that mean you go into tech?
Well, we've seen such a bifurcation, Tom, and what I see when I look at what our equity analysts are saying is that the blue chips, in a market that looks fairly valued overall, the blue chips do appear to represent a better value at this time. So the low quality stuff has been absolutely tremendous over the past couple of years. We think that the high quality, what we call wide moat companies, are looking pretty cheap.
So on that chart, folks, the line will turn over is what Christine Benz is saying. Now, Christine, I want to talk about a sidebar in your note, which is great, particularly because we just had Dan Fuss on from Loomis Sales. The bottom line is, do your homework on a fund strategy. You suggest that some managers really have a mandate to be flexible, where a lot of them, you think you're going into something rigid, but it's not.
Well, yeah, there's bond funds can slice and dice things a lot of different ways. I think the unconstrained or go anywhere strategies are looking really attractive right now against the prospective headwind of higher interest rates. So PIMCO, with its unconstrained bond fund, has just been raking in the assets. Investors appear to be really liking this idea of investing with PIMCO with all of the assets that it brings to bear on the bond market, but also that go anywhere strategy is really attractive.
More of an active squared management. I just invented that phrase. I like that. It's a break exclusive, folks. Active squared management. Christine Benz will steal it from me. Earlier this morning on Bloomberg Surveillance, I spoke with Vincent Farrell of Soleil Securities, and I asked him about his take on the stock market over the past 2 years.
I thought the market was in the bottoming process. And when asked for specific stocks, I said, well, you don't know what's going to survive this. But I think maybe if you look towards a large cap value fund, which I don't manage, that you might spread your bets pretty well.
Okay, Vince Farrell talking about the way Christine Benz is going as well. Christine, what were you doing 2 years ago? What were you writing about? What were you recommending in the carnage of March of 2009?
Well, for one thing, we were telling investors not to abandon all hope, which is what we saw. A lot of investors retreated to cash. We've been banging this high-quality drum, though, I have to say, for a while now. So I think even back then, we thought high quality was relatively attractive. That's just our bias, mainly because you're going to survive better on the downside in the high-quality companies.
Christine Benz, thank you so much from Chicago and Morningstar.